So being on the internet in general, sometimes some of the feedback can be a little bit rough, a little bit soul crushing, but in general, there's a lot of nice comments as well. And there can also be just comments from people looking for more information, trying to improve their knowledge around investing. So hopefully I'll be able to answer some of those questions today. So just as a side note, I also publish videos on an Australian specific YouTube channel. Plus I write news, guides and product reviews as well. That being said, this is absolutely not financial advice. I don't know anything about your personal circumstances. I'm going to keep the information that I give very general, and it might not apply to you at all depending on what your circumstances are. All right, so I'll just start running through the comments. So I got this email from Marley who had read my ETF investing guide, and it says, so I'm just getting my head around ETFs and investing in general. To do this, I opened a brokerage account with IG and have started using their demo account to get used to the platform. What I would like to do in the future is invest in the Vanguard shares index and put around $100 to $200 a month into it as I go. Although I was wondering, each time I invest money, am I placing a whole new buy order each month? With my current broker, the fee is $8 per transaction, which seems to be pretty low to other brokerage companies. Do you think this is okay, or should I look at other options? That's a really good question. So it looks like you're trying to kind of dollar cost average into an ETF or multiple ETFs, which means that you're looking for a platform with a really low brokerage fee. Investing small amounts regularly, you don't want to have that eaten up in fees. And yes, every time you put money into an ETF or you transfer money into your ETF, that is a new buy order. So you're potentially getting hit with a new brokerage fee each time. So if you're looking to dollar cost average into an ETF, you either want to find a platform that allows you to do that with zero brokerage fees, or you're going to want to invest a little bit more money to make it worth the fee that you're paying for it. So it might be worth just investing a larger amount less frequently rather than smaller amounts frequently. Or your other option is just to invest in a robo-advisor, like for example, Raise, which is a micro investment app. It's called Acorns in the US. It doesn't charge any transaction fees every time you want to add more of your funds into one of the portfolios, and you're not going to get charged a fee each time you do that. So it is a really great way to dollar cost average. Instead of investing into one individual ETF, you're investing in a portfolio of ETFs. I got this comment from Chris Chrisman on the Best ETFs video. I invested in NRGU, Gush, and BNKU last month and have lost 24% of my portfolio. You show them as gaining over 100% or more. Is everyone selling them at the end of the year, or why are they going down every day? That is a really good question, and I'm sorry to hear about the losses that you've had since you've bought into them in the last few weeks. So just to give a bit of context here, I did a video on the world's best performing ETFs over the last 12 months. And these ETFs were delivering amazing returns. I'm talking like 400% return in a year, 300% return in a year. And that's because these ETFs were leveraged ETFs looking at a very specific market, often the energy market or the oil market. That means that these ETFs aren't really meant to be held for the long term. And I really hope I made that clear in the video. I now feel like I have to go back and double check that I have made that clear and maybe add a note in the description. But you shouldn't be thinking about these as a long-term investment. These are almost like actively traded stocks because they're leveraged, so your losses and your gains are going to be magnified. So if the oil market, for example, increases by 10% in a week, then your ETF return will potentially, depending on how the ETF is set up, deliver 20% or 30%. And of course, the same thing happens if you go backwards. To your next point, is everyone selling them at the end of the year, or why are they going down every day? So for example, I'm looking at your first two ETFs, NRGU and Gush, and those are oil ETFs. So they're going to be going up when the oil prices go up. They're going to be going down when oil prices go down. So super volatile. It's not necessarily a matter of people buying in or out of these ETFs. They're often influenced, depending on how the ETF is set up, influenced by the commodity prices instead. Often they're using derivative contracts to track the price of oil, not necessarily individual stocks. Although even if they are buying into individual oil stocks, People will be buying and selling these stocks depending on how the oil market is performing. So super volatile. And the other one, BNKU, it's a bank specific ETF. It's looking at the bank market. Bank stocks are going down at the moment because everyone's getting a little bit worried about the future of the economy. Inflation is going up. The markets in general are going down. So you'd expect to see bank stocks going down as well. If you've lost a large amount of money in these ETFs, my advice would be to seek assistance from a financial advisor who will be able to take your personal circumstances into account. That's really important, especially when you're investing a large sum of money that you might be relying on for your retirement. You don't want to be messing that up. I got one message sent directly to me on Facebook. I get quite a lot of these actually, just social messages. People have obviously found me in different forums or whatnot, and they send me direct messages. I don't mind it, but I'm not necessarily going to respond to it. So this is from Bilal. He says, "Hello, miss. How are you? I want to ask one question to you. I really love to buy gold bars and jewelry, but like richest man Warren Buffett and Bill Gates says gold is worthless and just a shiny metal for ornaments. Second, Chinese, Russian, and many other central banks are buying gold. Miss anyone of richest person or family who trust on gold or buy gold? I'm so confused. I have asked this question to World Gold Council, Mike Maloney, and Robert Kiyosaki, but they did not reply." I love that you've put me into this spot with the World Gold Council and Robert Kiyosaki. That's amazing. You tried the World Gold Council, now you're trying me. Is anyone going to respond to this question? I think you're asking whether gold is a good investment. Potentially, that seems to be maybe the theme. And history tells us gold is a good investment. That's all I can say. And tends to be a little less volatile in the stock market, although these days gold is getting pretty volatile. Okay, next, Sean Morris wrote a comment on the gold investing video that I did. Can I buy an ounce of gold or more and keep it at my place to avoid storage fees? Yeah, you can absolutely just buy gold and store it at your house. Like you can walk into any gold bullion dealer and put it in your pocket after buying it and take it to your house, and then you don't have to pay any storage fees. I guess the reason people do tend to pay storage fees is because they don't necessarily trust the security of having gold in their own home. Like if someone was to break in, they could steal that gold. Whereas if you keep the gold with the bullion dealer that you bought it with, they usually keep it in these very secure vaults. And if it's a trusted bullion dealer, then there's really high security, much better security than what you'd be able to provide if you were to store the gold under your bed. Okay, so the next is from George. He says, "Hi Kylie, I live in Sydney, Australia, but I'm so keen to invest in fractions of Ethereum, Bitcoin, and other cryptos. I just need the best app platform to buy and hold for the next 4 months, 12 months, and 7 years, please. Your advice would be highly valuable for my retirement investments. Yours sincerely, George." Good question, George. I think a lot of people want to understand which platform they can trust and which platform they should put their money into for the long term. When you're picking a platform to trade cryptocurrencies or to buy and hold cryptocurrencies, it's a good idea to always check that the platform that you're choosing is registered with your local regulator. So in that case, it would be ASIC, since I can see you're based in Sydney, Australia. There are a bunch of platforms that are registered to ASIC. I don't want to tell you to go to Finder. That's the company I work for, but Finder will only show a list of platforms that are registered with the regulator, basically. It doesn't mean that the cryptocurrency market is totally regulated, but those platforms are regulated. So if that platform was to go under and your money was stored with them in some way, you'll get that money back. I can't promise you that you'll get that money back, but as far as the law prevails, you'll get that money back. And as for investing in fractions of cryptocurrencies, most cryptocurrency exchanges that I know of at least allow you to invest in fractions. You can invest in a very small portion. You can invest $10 into a Bitcoin if you'd like. You can also dollar cost average into different cryptocurrencies depending on which platform you use. For example, the Binance platform lets you invest as little as $10 into, or I think it's $20, sorry, each week, month, or fortnight into a coin of your choosing. And so you don't need to worry about the market volatility. You just continuously add an extra sum of money into the coin of choice. Next is from Jim, who emailed me after reading my How to Invest in Index Funds guide. He said, "Hi Kylie, sorry to bother you directly. Not a problem. I had been reading your article and it kind of encouraged me to look a little bit more into it. That's great. Index fund investing is an excellent choice. I'm aware you can't set up a children's pension in Ireland, and my plan is to try and get some money in place for my kids in say 20 years time, where they can have a house deposit available, something like that, without having to worry about savings. Do you think the index fund long-term investment is a viable option? There's no return on savings anywhere now, so I'm just thinking ahead. Let me know what you think if you can." That's a really good question. Should you invest in an index fund? I can't advise you because I don't know all your details, so I can't tell you where you should put your money. It totally depends on your circumstances, and it totally depends on how much money you've got and what your time horizon is. But I can see here you're thinking about putting money away for 20 years. And generally speaking, 10 to 20 years at least is a really good period to put your money into an index fund. Historically, we've seen that you will get a return of at least 7 to 9% per annum each year, which is better than what you'd get if you're putting your money into the banks these days, for example. And it's also considered a much safer way to invest in the stock market. Rather than buying individual stocks, you just don't know whether or not the stock that you're investing in is going to go up or down. It's a highly risky investment, just picking one or two stocks. So an index fund is a diversified portfolio. It's a great option for putting money away over a 10 to 20 year period. I got one from Craig Van Buren, sent from his mobile. "Hi Kylie, call me. Kiss hug." I don't know if I want to call you Craig Van Buren. I don't know what you're about, and I don't know what what you want. Probably not going to call you, although that could make a good video, calling Craig Van Buren. Meadow Hamdani commented, "Can we somehow estimate when exactly the market is going to crash?" A lot of people do try to estimate this. A lot of people make a career out of trying to estimate when the market crash will be coming and when the next bull run will be coming. Ultimately, no, you can't predict when the market is going to crash. There are a bunch of signs to suggest when we might be heading towards some kind of market correction, especially if we're in a bull run and we've been seeing the market going up for a long time. It has to come down at some point. If it's been going up really quickly, you can expect that at some point it might be coming down very quickly. That being said, with all the technical analysis tools in the world and all of the experts all watching the market, it's very rare for someone to accurately predict when the market is going to crash. I think we can all remember Michael Burry, who predicted the GFC. He is now famous for predicting the GFC. That's how rare it is. Colby has commented on the best ETF video. He said, "Great video, but leveraged ETFs are not meant to be held long term." That is a really good point. The ETFs that I mentioned in the best ETFs video are all highly leveraged. They're highly specific and they're very volatile. You should not be holding these ETFs for longer than potentially, a few months max. It depends how the market's moving. But these are ETFs that you'd want to be watching closely. You would not want to be sitting there and forgetting about them, because you could lose a lot of money very quickly with them. I'd think of them more as being like highly volatile stocks, like more like penny stocks almost. Like you want to be keeping a very close eye on these ETFs. There's a reason these ETFs have all performed phenomenally well over a 1 year period, and that's because the markets they track have done very, very well. John Ramos said, "Great video. Speaking of gold, do you think it will rebound back to the 2K spot price level?" Will it hit the 2K spot price level? Absolutely. I think at some point it probably will hit the 2K price level again, especially if we start to see the market downturn happen, which a lot of people think will happen in 2022, 2023. It's really impossible to tell, but essentially whenever there is a market crash or a recession, gold prices do tend to jump very quickly. So yeah, absolutely at some point I'm sure we'll see the spot price head back to the 2K level. Okay, that's it from me. Thanks so much for leaving comments on the channel or an email or social. If you'd like to leave a message on this video with any questions or any comments or any suggestions, please do so, and I'll be doing another one of these videos maybe in a few months' time if I get enough comments. Now, I did tend to focus on a lot of the negative comments in this video, mostly just because it's a bit more amusing and it's a bit more interesting, but I do get a lot of really nice comments as well, and a lot of really supportive comments. It just feels a bit weird sitting here and kind of reading out all of these complimentary comments to myself, so I didn't do that. But I really do appreciate when you do leave those comments or when you do email those comments to me. It makes it all worth it. So please continue to do so, and please hit the like and subscribe button for this video. Thanks guys, see ya.